What if I told you that some of the richest people in India don't evade taxes? No Swiss bank accounts in secret bunkers, no black money hidden under temple basements. Instead, they legally avoid taxes through clean signatures, complicated trusts, and some very clever tax lawyers. While you're paying GST on your Zomato order, they're saving crores in capital gains. This is Money Matrix, where we decode the elite money playbook. Hit that like button, subscribe for more deep dives, and comment below. If you made 10 Indian rupees crore tomorrow, what's the first thing you'd legally write off? First, let's fix a misconception. The rich don't get rich from salary. They get rich from assets. You earn 1 Indian rupee lakh per month? That's great, but you're taxed at 30%. You sell shares and make 1 Indian rupee crore? That's taxed at just 10% if held long-term. You flip property and use indexation benefits? You pay far less than your actual gains. Real talk. In India, the source of your income matters more than the size of it. The tax system actually favors wealth creators, not hardworking salary earners. Now let's dive into the rich person's tax toolbox. The capital gains game is where the elite shine. Stocks, mutual funds, startups, REITs all get special treatment. Example, long-term capital gains, LTCG, from equities are taxed at just 10% after 1 Indian rupee lakh exemption. Compare that to your 30% salary slab. Ouch. That's why many business owners, startup founders, and wealthy families invest through holding companies or LLPs. They don't earn, they exit. Case study. Flipkart's Sachin Bansal made over 6,000 Indian rupees crore from his exit. With smart planning, most of that will be taxed at preferential capital gains rates. Question: if you had the chance to build wealth tax efficiently, would you still want a stable job? Next up, the good old HUF, or Hindu Undivided Family. Sounds like a traditional idea, and it is, but it's also a brilliant tax structure. Here's how it works. A family unit forms an HUF under Hindu law. That HUF gets treated as a separate legal entity for taxes. It has its own PAN card, its own income, and its own tax slabs. In plain terms, you can split income into more entities to reduce your effective tax. Real use. Wealthy families use HUFs to invest in real estate, take home loans, and build multi-generational wealth. You, your spouse, and your kids may already qualify. Joke. Turns out, your dadi isn't just why she's a tax-saving asset. Seriously though, for a family earning Indian rupee 50 lakh plus, this is low-hanging fruit. Now, things get interesting. Offshore companies, shell firms, tax havens. Sound shady? They can be, but they're also legal. Indian billionaires have been found in leaks like the Panama Papers and Pandora Papers, owning assets in Dubai, the British Virgin Islands, and Singapore. But here's the twist. Owning an offshore company isn't illegal. What matters is disclosure and source of funds. Strategy. Many use round-tripping, investing Indian money abroad and bringing it back as foreign investment. That way it's not income, it's FDI. Smart, right? Fact. Before 2016, Mauritius and Cyprus had tax treaties with India that exempted capital gains entirely. It created an entire generation of tax-free millionaires. Opinion. Honestly, this one is ethically gray. It's legal, but clearly tilted toward those with power and access. Okay, here's a loophole hiding in plain sight. Agricultural income in India is 100% tax exempt. Asterisk. Yes, even if you're earning crores, as long as it's from agriculture. Now, the intention was noble, support the backbone of India. But guess who took advantage? Politicians, business families, celebrities, by showing income as derived from farm produce. Large sums have been declared tax-free. Data. In 2016, over 700 individuals declared 1 Indian rupee crore plus as agri-income, many of them based in metro cities. Question: should this exemption exist at all in today's economy? Joke. Farming may not be profitable for smallholders, but for the ultra-rich, it's a gold mine on paper. When the rich give, they give smart. Enter charitable trusts and private foundations. The idea is simple. Set up a foundation in your name. Donate money to it. Get tax deductions. Maintain control over how the money is used. Think of it as saving tax while building legacy. Real examples: Azim Premji Foundation, Shiv Nadar Foundation, Infosys Foundation. These do real impact work, but also offer massive tax benefits to the founders. Question: if you could choose where your tax money went, wouldn't you prefer funding schools over paying bureaucrats? Lastly, the elite don't operate as individuals. They operate as businesses. From LLPs, limited liability partnerships, to family offices, smart legal setups allow them to pay lower tax on profits, deduct business expenses, reinvest money tax efficiently. Example: YouTube creators earning Indian rupee 5 crore plus annually save lakhs by registering as proprietors or LLPs. Real business owners deduct travel, laptops, even home rent legally if used for work. Lesson: if you're making consistent income, don't be an individual earner. Become a tax-optimized entrepreneur. So let's recap. Here's how India's rich legally reduce taxes. Capital gains salary. HUFs split tax liability. Offshore entities minimize exposure. Agriculture income equals tax-free gold. Charitable foundations equals legacy plus tax relief. Business structures equals power plus write-offs. Now, is it unfair? Maybe. Is it illegal? No. My opinion: the tax code is like a maze, and those who can afford better maps win. But here's the truth: some of these tools are available to you too. You don't need 100 Indian rupees crore to start an HUF or set up a side business. You just need knowledge, strategy, and a good chartered accountant. Question to ponder: should India reform these systems to be more equitable, or should everyone learn how to play the same game? If this video gave you even one insight or aha moment, hit that like button so YouTube knows it's worth sharing. Subscribe to Lux Wealth Society for more behind-the-scenes money secrets of the ultra-wealthy. And tell us in the comments, which tax-saving strategy surprised you the most? Until next time, earn smart, spend smarter, and always ask one question: how would a billionaire do it?